All right. Hello, everybody. Day Trader Rockstar here. And a very special video. This is, again, first of all, broadcasted in high definition. Recorded in high definition. This is something I messed up on a couple of videos before this when we were talking about the bot and stuff. I apologize for that. That should be corrected. I'm going to try to redo those videos. But anyway, this I think is going to answer a lot of questions. I can't wait to talk about this. Yeah, I talk about this pretty much every single time I do some coaching. And, you know, the journey I've been on in trading, you know, and identifying markets and teaching markets and stuff. But the real thing is being in front of these markets for 10, 12 hours a day for 25 years. It's led me to see things in this market. You know, I've come full circle. We've all started off the same way, you know. Unless you had a mentor or some kind of your onboarding experience, a lot of people find trading and they want to explore it and they want to find out, you know, how to trade, and they look it up and they go on YouTube and they read a lot of books and they try to absorb everything. But it's so much, and we all go through that path in the beginning, trying to figure out which is the path we want to take and how we're going to be, what kind of trader we're going to be, and what do we, you know. But it's, you know, it takes time. It really does. And anything I say in these videos, you're still going to have to find your own way. I'm going to show you the way. You know, that's what I'm very proud of, and to be able to say, I know the way, but I also know the way is not as easy as you expect it, because most people can't wait around for the signal, or they don't have the patience to be stoic and disciplined enough to wait for those setups. So you're going to try to do other things. And when you do other things that are not as good as the original thing, you're going to cut into your profits and you're not going to do as good. And that's going to be mentally thing. You're not a robot, an android. So you have to deal with your, excuse me, you're going to have to deal with all that. And that's a journey in itself, identifying the person you are and how you're going to deal with these issues. And that's when it comes down to mentally. The mental process of trading is not, it's not about, I could show you like a 90% time a setup would happen. I've done the details. I want to show it to you today. You know, this right here, you're looking at my new cheat sheet for you. This is what I want. If you want to be successful, then you would want to just trade this style right here. And I want to go over each of it, each what it means, each thing. And kind of break down the trade for you and just show you how easy it is to see it. And I get so much confusion coming back to me, you know, like, oh, I miss it, when do I get in and stuff. So we're going to go over some of that stuff today. But like I said, I could teach you the proper way of finding these levels and trading them, and especially identifying them. You have enough tools and stuff, but it's going to be up to you to be able to wait for them and to be in front of the computer when they are there. I consider these setups ATM machines. I think even that's not even a good term, but whenever you have them, you could withdraw money from them. When you have this setup, when you have the perfect divergence, when you have everything lined up perfectly, and when you could put your money to work and you're going to get that payoff, and it's going to be an easy payoff because it just works. And for the reasons it does. And the reasons we wait for it, because it is math, it is science, it's momentum, and there's a lot to go into these patterns, and combining these new things that I want to add to them today, and kind of really force the issue to help people who are not able to trade this and are missing their opportunities. I want to help you by just kind of adding another stipulation, another criteria. You know, we talk about it. I said it has to be in a recognizable pattern, but I really want to talk about it today and how important that is, because once you start visualizing things, you're going to be able to see them on your own chart. So let's just jump right into this now. All right. Now, I might be all over the place with this. We'll see. I hope I could do a good job doing this video. My videos are always. Let me see. Something always going wrong. As it starts right now, something going wrong. I can't even get my thing off. Hmm. All right. All right. Thank you for your patience there. I'm back here with you now. I'll get rid of these banners just to let you know. Bolonox has a good, actually, a great DTR 91% off the 50K, 100K, 150K, 250K. It's a good thing. It goes to the 22nd. And the Apex here, DTR Apex is our standing discount, 80% off. So kind of good coupons there. I want to take them off the screen, take advantage of those. Let's do that right now. All right, so first thing, let's go kind of back it up a little. We're trading futures right now. So this is about trading futures. S&P futures, ES mini futures, micro futures, ES micro futures, MNQ, NASDAQ futures. Any type of futures like this technique works fantastic. It works great on stocks, and it works great on all time frames. The method has been built over years and years of just analyzing the markets and stuff and putting together a series of stochastic parameters that measure out different time frames in the market. And I've tuned into an area where we have what we call a quad rotation. When all four of our bands line up exactly, we tend to get the biggest bounces in the market. Combined with a divergence, which is usually defined by a lower low on the price, but a higher low on the stochastics, of a 6-degree angle or more. And everything for me is very mathematical, or very logical. Everything has to be visual, So, and because I'm so used to being in the markets and I know how the market's set up, so all my rules are based off of identifying the same setups that I recognize these events happening in. So that's why the methodology works so good. We have the patience to wait for this. So what are we waiting for? So one of the first things, again, this is trading on the 1 minute time frame. And what I'm doing is I'm searching my business plan, I like to call it. Everyone should have a business plan. You should know why you're trading. You shouldn't be just randomly trying to make it through the markets, because you'll eventually just, that's very hard to do. Have a game plan. Have a good risk management. Have these things defined. Be perfect at this. Be perfect at your practice. Don't trade your sim accounts, your prop accounts as gambling. Take everything serious as it's real. You have to. This is and again, I keep on stressing this also on my show. This is $1 trillion industry. They're not just letting anybody come in here and just take money out of the market. It's not that easy. Traders don't make it. There's too much emotion, too much emotional baggage, too much greed, the potential is being in the casino. And some of these moves, what I like to do is just take advantage of the market. The market's going to give you something. We know when it's going to give you. We don't know how much it's going to give you, really. But I do know most likely it's going to give me enough that I'm going to, be able to be in a profitable trade. And possibly even more, typically, because if we have that, in this case, let's just talk about the two setups that we want to take. So I'm in the markets, and just say, this is the markets actually open up today, right? So I'm watching the markets. This is overnight, all right? Not much going on overnight. But even if I was overnight trading, there's absolutely great opportunities here. So the one thing I'd be watching for overnight, just letting it go, walking around, doing my thing, looking at the computer, maybe setting some trend, maybe setting some alerts on some of the moving averages to kind of give me a feel for what the markets do. But eventually I want to start to realize that we're in a what's called a recognizable channel, where I have two pivots and a third pivot, really kind of defining the range here. So kind of right at this level, when we have this one, we start to put in these. This is pretty easy. And we start to see this range. So I extend it out, and that's what I'm always doing. I'm riding this, and all our entries are going to be off of this trend line. And the only two entries we're going to be taking off of this trend line is a quad rotation. That means when all four stochastics get oversold. Now, a regular quad rotation could happen at any point, but when it happens on a trend line, it actually gives a much better results. It's just a perfect bounce. It's like anything else. If it comes down to the VWAP and you have a quad rotation, you want to take that. There's always got to be, excuse me, it always has to be a supporting indicator. The HPS methodology is based off of 5 really good indicators. And we need 3 of the 5 to line up to be able to classify it as a super signal, but more of what we call an HPS setup, high probability setup. So just like this, it's just one of the criteria is having a quad rotation. That's just one criteria. Another criteria is going to be you're going to be on a channel line. So that's the 2 criteria. And then maybe the third criteria could be a combination of reversal candle. What other ones we have? If there's another moving average underneath us or anything. In this case, I just like the 1, 2, 3 pattern, the quad rotation and the trend line. And that would be a good entry right there. That would be a good entry. Now, the other type of entry you want to really pay attention to, and it always has to line up. And when you take that trade, you want to be buying into the weakness. You want to believe, as this gets all down at the same time, you're actually buying. You're trying to hit that bottom. You don't care. You're just trying to get the bottom, because that's what you really want. You don't want to feel good about this trade after it popped, because, believe me, the overnight trade is not that busy. So here we have a nice little bounce off of this. And typically, when you have a quad rotation channel line, you break outside the channel. So these are what we're looking for. We're always looking for what I call pivots. And pivots come when you have a directional move in the market. You have to go from one direction to another direction. So every little thing has a pivot. Every little channel, it gets measured out by me, and I'm always just kind of measuring them out. And we'll see this pattern all the time: upward channel, downward channel, upward channel, downward channel. And every time we got to downward channel, we're looking down here. Upward channels, we're looking for the divergences up here. All right, and so that's very easy. Now that's my environment that I'm hunting in. So now I have this, I have this channel line here. This one came through, this coming, and then I put that 1, 2, 3. I extend that one out all the way, and I put this one out all the way. And we're watching this area. So I was watching it before, and it was a quad rotation right here. Now, what I like to do sometimes is a little trick. sometimes it's very hard to see if it's above the, or the 20 line or anything. So I like to put a line down here on my 20 line on the 60-10 where it says 0, 0. So what I'm going to do is I'm going to extend that both ways, and I want to make it yellow. And what I'm also going to do is make it one. That's 3. 1. All right, and then we're going to OK that, and I'm going to lay it on my 20 line here, and then did I get rid of the other things? No, I never got rid of the Bullenach stuff. I'll get rid of that. Oh, what happened? I just killed everything. All right. So yeah, that was a nice little quad rotation right there. Nice little quad rotation. So I put that yellow line in here to see if we can actually see anything underneath it. It's very important for me to kind of make sure we kind of wait for that quad rotation. I mean, everything has to be under that 20 line. Sometimes you could get something that's laying right on it. I guess that's kind of a dealer's choice type of thing there. You have to decide if that's good enough for you or not. Most likely it probably will be, in the long run, because you already got the 9. And another thing is just over time you're going to learn how to analyze the movement of the stochastics and how, as a longer time frame, sometimes this will coil down as these catch up, right? So these will have more of a, up, down, up, down, up, down, eventually get into an up and coming down, and eventually this caught all the way up. So if you could actually see your faster stochastics kind of just gyrating on the way down, even though it hits it a couple times, it doesn't make those new highs, doesn't rotate back up. Same thing. You can start to feel that and see that. Then you're always looking at this to catch up. I mean, we need the 60 to be oversold. So when that 60 and they all line up, usually you have a great opportunity there. So that's another thing I like to look for, but hard to see, in real time. In real time, it's very difficult sometimes to see that. So every little pullback, every little pop, put little channels in. But once you start to establish a good channel and you have a quad rotation, that's okay. We're kind of like, here you have 1, 2, 3. I put that channel line right in. That's why I extend it, because I'm always looking at the bottom of the channel line. And if this ends up getting oversold, and that just hits right on that channel line, and plus we're on the support line 58.90. So that's an important trade right there. Now over here, we actually have what I consider the super signal. Now this is hard. Again, there's a lot of chop here. All right, let me clean this up. I'll tell you what I'm seeing right here. I'm just going to clean it up and go forward. We'll kind of, we'll kind of just measure it out as we're going. If I was seeing this. So if I'm seeing this now, we just came out of this and we're popping out, right, right, oops, sorry, that wasn't, I didn't mean to do that. I keep my support lines where they are. I'll start picking up in this line, this line really here. I'll just start picking up on that. And then, I'll drop it here on this one candle, that little candle right here, that spike down candle. So that was probably, right there, I'd be watching that. So now we have a tighter channel line in here. And actually, what you do here is you get that quad rotation happening right here, right? So you got that little quad rotation right here. Start to actually move up, and it comes back down. Doesn't take out the lows, but it comes back to the closing price, and the stochastics turn much higher. So you can this is almost what I consider, what I call a quad divergence. So you have the quad rotation, it bounces, it comes back and puts in, but it's not really. It's, it's probably as close as you're going to be, because we use closing prices. And as you can see, all the closing prices are on the same plane there. There's nothing underneath that. The green is going to close on the top of the handles, top of those bodies. The red's going to be, close on the bottom of the bodies. As you can see, they're all the same right there. But this is not the same. So that's what triggers me into that. So being able to focus on that focus on that during the day. That's the tough part. Luckily, that's what I do. That's what's my job, is to kind of get these out to you. I throw out that Voxer. I think that's an excellent alert service. If you want to get that, if you're not a member of Day Trader Radio members get that. And I send out these signals from this. When we do have a quad rotation or a VWAP channel line, you want to know when that's happening. And what if you're not in front of your computer? So I send out a walkie-talkie on your app, the Voxer app, and it goes out to you, updating you on any potential, what I call super signals. And there might be 5 of them a day, maybe there's 3, maybe there's just a couple, because I only put out the super signal. I don't bother anything. It's really, really good. So you could get that on patreon.com/Day Trading Radio if you don't have it. All right, so that is my pride and joy. I envision that really becoming the best alert system, and to make most people money on those, because this is exactly what we're doing. I'm watching the market. I start to see a pullback here. So once I start to see the pullback, I'm now in all right, now I'm in the mode here. What are we looking for? Well, we're looking for either a quad rotation or a divergence. That's the only 2 things we're looking for inside a pullback channel. Don't see a quad rotation. It's way above that 20 line. I got to get oversold. But I do see a divergence here, very slight. I would say it's very hard to see that, sorry. That higher low, that, probably double bottom. If you could see that and you're studying it and you're in focus, then you're going to see it. Like here, you can actually see this upward channel. You have this, remember, we're looking at the closing prices, right? So the closing price is a little higher highs, and that was a lower high right there. So it's a mathematical thing. The momentum's starting to fall off. We get the little push higher, and then it typically goes back down. So we actually had that nice little, and that only comes up there. Now, you don't, make sure you're in the channel. If you're in the channel, and it could be a tight channel, and you have that little spike higher, that closing price higher, and you definitely see those lines hanging out, you see a definite drop underneath that, all you'd have to do is put your stop right above the candle here, and you're safe, And, it's just, this is at night, it did move back. How do you gauge when to get out? Well, the best thing to do is just take it off on the 9-3 rotation when it gets back down to 20. That typically gives you another move back up on the 1-minute time frame. So he played safe. Nice downward channel. And boom, right here. Looks like a little quad rotation right into that. Now we just talked about that one, I think, just before. Now even now I have the NASDAQ underneath us. Now looking at the NASDAQ, it works great on the NASDAQ, sometimes even better. Look at this quad rotation right here. So again, that's the only thing we're looking at is I see this coming down. I see the lines. What I would be seeing here is this, and I'd put this down here. And look at that candle came right down to the thing, put in a quad rotation. That's why we're always buying into the lower channel line. That is your best trade ever. All right. Look at this. All right, we're coming in. This is sliding into home plate here. Boom, boom, boom. No, we're just above it. I can see we're just above it. I can't call it. Even though, that's where we are right now. So we just left off right now. But this is it. We're not going to complicate it. I don't want you complicating this too much. I don't want you automating this. Everyone says, thinks that what you need to do is you have to have a little feel with the market. Prices inside the recognizable 1, 2, 3 channel. Right off the bat, you're setting up your channels. You're just throwing them in there. You're waiting for that price to get down to the lower channel line. When it's down to that lower channel line, if your stochastics are lined up and you have a quad rotation, all of them are under 20, that's a trigger. That's a lower trend line trigger. Maybe we didn't get there and we bounced a couple times. We have a divergence, and we have a divergence inside the channel. Always take that. Buy into the channel line, buy into the weakness. Buy any divergence that appears inside the channel. So in this case, you had you had, a quad rotation divergence is unbeatable. That's where you're going to make your biggest moves. And then, again, place your stop 1 or 2 ticks under the pattern candle low. So if you're down here and you get in, it's just, you're getting in because of everything's lined up. And if it fails, then you want to be out either way. So you got to put your stop in pretty tight, and it should work fine. Especially if it's a divergence, it's already defined. You put your stop 1 tick underneath the divergence low. 2, depending on, sometimes you get a running divergence, but the running divergences, and that's a little more complex, you buy right into those, because the running divergence is the second mouse that gets the cheese. So that is really, what I want to see people really focus on. And that's what I focus on. I'm always waiting for something to just show up. I'm looking at things as small as this, and it might not be for everyone. It might, but I know when I see this, when I'm able to see the closing prices, and I see this, oh, look at this, it's starting to turn back up here out of the closing price. I'm seeing that divergence, and you're going to get a little move. You're going to get something. You're going to get something. Especially when you have a channel, because channels, the market doesn't just stay in one channel. It gyrates. It goes down and it goes up. In this case, it's been going down pretty good here. But again, that is a situation where, when you have this is actually a good point to go over, because you can have a steep channel line down here. And what you're seeing there, this is embedded. And that's the first warning signal. If an embedded 60-10, either on the, on the bottom here or on the top, on the above 90 or below 10, is an extreme warning sign that the trend is very strong in direction of that, to the downward side in this case. And when that is like that, it's up to you to realize that, that you're going to be fighting an uphill battle if you're taking your longs. And every long has to be adjusted to match the market conditions. In this case, you probably even want to take shorts instead. You want to take those rotations. If this is low and this moves up, these moves are all shorts. They're all little shorts here. So every rotation higher when you have a strong trending down. And you don't even get that too often here. Here maybe. Here, little pop, and it drops back down here. Drops back down. That's you have the tide. It's on your side. But dangerous market to go long it. You do get some quad rotations. Again, if it's all flatline, what I like to do is get a full rotation, usually on the 9-3, to kind of get a full rotation and come back to kind of reset it. Because if it gets really embedded for a while and you have real strong sell-off like here, I want to get that an upside move so we could establish some more pivot lines and stuff. And again, all I'm doing is looking for our channels. So, if we get an upside channel, we'll probably be able to spot that much easier. But this is nothing going on here. And again, fight the battles. Look for the bigger channels. The wider channels are going to be easier, and then you start to see the divergences. And those divergences will start to come in. And when you have a high-level divergence like that, that's what you're really waiting for right there. All right, well, that's going to be it on this updated video on the ES. I am working on the couple things on the bot. I know I'm aware of the issue with the stop loss, and it's a rhythmic issue. So I'm actually trying to get that patched. So I would just, if anybody using the bot, please don't use it unattended. Sometimes it randomly, sometimes doesn't place a stop, or stop gets stuck on there, and then you could hit it and turn into, all the orders will be off. And it's a sporadic thing that happens with Rhythmic and NinjaTrader. So just watch that until I patch that. And I think that was going to be it on that. Oh, the TradingView one too. Those long and short is out. I'm still working on trying to get the flag out. But that's it. All right. Hope everyone had a good time, and let's see everyone in the markets tomorrow.